things have pulled back actually, to where they should try and turn here. Trying to make sense out of this market day to day sometimes is difficult to say the least. And, looking at the charts, it seems to be, just does what it's supposed to do. And from another point of view, and it's always the way when you step back to a higher time frame. So is this going to be the turn? It should be, right? Looking at these pullback here to this place where it broke out. In reality, it should have stopped here and went higher in the most bullish market environment. But, the news of sanctions and so on and so forth, which is getting pretty old, had the market correcting. And, I was looking for this to make new all-time highs, and maybe this is going to be the turn where that's going to happen. So I always look at patterns as to, okay, what's happening now? What does it suggest should happen? And what could possibly happen based on historical price patterns, of course. So assuming today is a green day, closing, well, even like this, or ideally up near the high, that should be a buy setup that pushes prices up above this level into a new all-time high. On the other hand, and we'll see this tomorrow, at the end of the day, where it closes, and then tomorrow what the reaction is to it, a green day that does not do that and takes out these lows, prices are going to go down here to this major support level. We'll see how it plays out. If today, on the other hand, turns out to be another red day, closing below today's low, yesterday's low, it's going down there, down to the 50 MA and this prior bottoming tail. And that would be a deep retracement, somewhat like this, which typically results in a need to spend more time backing and filling before prices could go up if it's going to do that. So, this market has been in one in which you have to process what's happening day to day, and sometimes it's easier than others, such as patterns like this, where you get a 180 type reversal and then it takes out the highs. That's a no-brainer, meaning it's going to go up. This one here took more time, bar by bar, until you get a wider range reversal bar there, and then it becomes obvious as to what it should do. Big bottoming tail bars like this are easy to read and say this is what it should do, and it should have made a new all-time high, but the news, as we know, played havoc with that idea, and now we're to where it should turn, right? And we're going to see how that plays out. NASDAQ stabilizing, same story. Yesterday was pretty much a go nowhere day. Opening closes about in the same area. Tails on both sides. Indecision. Am I going up? Am I going down? I don't know. Today, is it an inside day? Do we get something going up or down? We're going to see. Again, these kind of trading day-to-day action make it difficult to find opportunities, and it was. So again, we'll see. Do we get a decisive candle today, closing strongly or negatively? That would suggest a move in either direction so far. And I'm repeating yesterday's commentary in that we're going sideways at a prior high, which so far is bullish. When anytime prices do that, whatever the time frame you're looking at, sideways price action in the area of a prior high is bullish and suggests higher. And when it has to break above those highs to confirm that. So that's the interpretation of what's going on at the moment. And we're looking for confirmation of higher because the trend is up. And so we'll see what today brings us. The Dow, we have, had the breakout bar or the breakout failure here, pull back down to major support. We're getting stabilization. Same story. Can it hold here? Do we get a green day? And the depth of retracement here is a concern as to whether it can take out these highs. But if the NASDAQ and the S&Ps are taking out the highs, well, this should at least attack that high, and we'll see what happens. when it gets there? Or is it going down to the next level? So I try to share as much of the thought process with you because we're here to learn. So what's happening here right now is if we get a red day, well, then it's probably going down here. And when you have reference points that are so close together like this, it suggests chop. So it's not as if you have like the price action here, which is far from a prior high. Yes, there's, areas along the way toward that high, but when you have a reference point that's far away, it suggests a bigger move. Whereas if this fails here, the next reference point is relatively close. So it doesn't suggest taking any action if this fails, because we'll then wait for it to get here and then see if it makes the turn. And if we get some kind of bearish price action here, well, that's going to be a bigger opportunity because there's a void below. Now, this environment, until we get something decisive here is, choppy. It's more difficult. We're waiting for an event like this, a price pattern. That's what I call an event. Whereas a strong suggests a move in one direction or the other, and we just don't have it yet. I'm going back to the S&Ps here. Whereas if the S&Ps fail here, say we get that green day and then it breaks, at least we got a somewhat decent move to the next support level to consider bearish strategies, but it's still in an uptrend, which says you better be quick, to play between here and here. Bonds, nothing today, just flat, but so far they did dip down. Let's see the intradays here. You had the dip down and the move back up again. So I'm looking at this. Again, we'll see where this ends, but if it's a red day, well, we go lower or chop around. If it's a bottoming tail bar day, that would suggest a measured move back up to these highs, which means interest rates go down, right? Inverse, prices go up, yields go down. That's not going to be a good sign. If yields are going down because of what we talked about with an inverted yield curve, we don't want to see yields going down at this point because these are longer term, because short term they're going up. Oil, right? Choppy, erratic price action. So here we've got a nice bottoming tail from yesterday. Here was the continuation down. Right? Next reference point right there. Buyer stepped up. Not where we had a void that suggests, hey, the break here is going to be a great opportunity. On the short side, buyer stepped up, back up into the chop. Nothing really due here unless you're willing to sit through this, trying to get through this mess with a stop below the bottoming tail bar. So, but oil's starting to move up. That's a positive sign. Gold, just, repeating what we've been saying here. Stay away from gold. No reason to be buying it, owning it. Wide range bar breakdown suggests it's going to go lower. It is in this area where there is some support here. So we'll see if it holds. Not much reason for it to, but we'll see if that turns out to be a 1, 2, 3 continuation pattern, or whether it could be a breakdown failure type of bar where, gold buyers get some relief in some type of a retracement here. We'll see how that plays out. Euro breakdown with all these other currencies, with the news of what happened last week, which means the dollar's going up. There's positives and negatives to that, of course. And I'm keeping an eye on to see if this continues to drop. S&Ps, I just like to look at the spiders here, of course. So they're trying to stable, actually dropping here as I'm speaking, below this overnight trading that happened here. But this little reference point down here. So no matter the time frame that we look at, it's pretty much the same message here, in that we just don't have some huge opportunities for a larger move at this point. So you trade accordingly. And until something significant happens one way or another, the message here is be fast, sit on your hands. You know, there isn't a great opportunity here to make a significant move, and which equals, a significant amount of money. It's just not here at the moment, and we just continue to wait for things to turn around. Financials look like they're going to continue to weaken. They're stabilized here. We were looking at the regionals yesterday, the KRE, and they're tightening up. Let's take a look at that. They're tightening up where the highs are dropping and the lows are coming up. It's going to break one way or the other. And, while it's got this support here, this weakening in XLF would suggest that those break lower, but we'll see. The strength coming off of this low after weakness is just another confirmation of this Mr. Schizo type of market where that weakness all of a sudden results in buyers stepping up in a big way. And now it exceeds this high and back down again. So some type of correction at this point expected, but if it goes back down to the low, it's surprising, but on the other hand, kind of not surprising. Technology, same story here. The story pretty much the same wherever we look. The Russell is sideways chop after the move up. Down here, pulling back here this morning. And what else to consider? Internet. We got this sell setup. Things started to look like, maybe they could reverse up yesterday and take out, Thursday's high and push higher. Now they don't. We clearly got a sell setup, but sometimes these sell setups, when they fail, result in significant moves back up toward the high. We'll see. TPR. Yes, it's traded $50. Yeah, 50.35. So how do you play this as a day trade? Well, you got to avoid above. I like the fact that it's gapping above a red bar and resistance. Is it an ideal gap? Not ideal because it's not just clearing resistance. It's exceeding it a bit, but that's okay. You have to, we always look at what's the broader market doing at the time. Is it dropping? Which if this is holding, kind of you lose one of the factors that could drive it higher. So you got to look at the pattern at the time. The other way to do it is if the market is dropping, that it pulls back into this area here. So what was resistance becomes support. If it pulls back into that area, well, that could be considered. Or, right, we always, bar by bar analysis, we have our scenarios based on our price patterns, but what if it comes, you're looking for it to come here, but what if it gets to 50.5 and you get a breakdown failure in a bullish event where it reverses right back up again? Buy signal. So yes to the day trade. How it sets up, we'll see. All right. All righty, that's enough, Dan. Let's take a look at gappers and open positions. And wow, Amazon's up almost 19 points. What is going on there?